Hi, I'm Lance. Welcome to Feel the Boot, where you can get tips and advice for startups and interviews with entrepreneurial leaders. When you give a pitch, your audience is only going to remember a couple of things that you say. Your job is to make sure those are the biggest strengths of your company from their perspective, and that can be the trick. In this episode, I'll help you identify the key strengths in your company. I talk a lot about the importance of emphasizing the key points in your presentations, particularly pitches. Now, if you want an overview of how to build a killer pitch deck, I recommend you go take a look at my episode, 5-Step Process for Creating Killer Pitch Decks, link down in the description. I've heard from a lot of people that while it's easy to say identify the key strengths in your business to emphasize them, it's actually much more difficult to do that. And you need to do it from the perspective of your audience. In this case, with a pitch, it's your investors. So the first step is to understand what your investors are interested in. What does the angel investor or venture capitalist want to hear? For some insight into that, I recommend you look at my video, The 9 Things Investors Want to See in a Pitch. Again, link down in the description. Rather than telling you what to do, I think it might be more helpful to give you some real-world examples of strengths in companies that I'm very familiar with. So we're going to look at 4 case studies in this episode. Now, one thing that may surprise you is that none of these companies' strengths, from my perspective, were their product or the amazing technology that they'd created. They're all to do with the nature of the company and the business model. Now, before we get into the meat of this episode, I've got to take care of a little business. First, I want to tell you about a community that we're creating over on Facebook. Being a founder can be a lonely business, but it doesn't have to be. So we created the Feel the Boot Founders Alliance as a Facebook group, as a place for founders to join together in a community with other entrepreneurs, support each other, trade advice, get new information. I encourage you to head over and join it. There's a link down in the description. Second, and if you watch a lot of YouTube videos, you probably know what I'm going to say, please subscribe to this channel. It makes a big difference. Ring the bell to be notified each time new content's uploaded. And if you enjoy this episode and find it useful, please give it a like so I know what kind of content is most useful to my audience. And feedback is golden. Please let me know what you thought of the episode and any other comments down in the comments. So with that out of the way, let's jump into those examples. The first company I want to talk about is a smart pet wearables company. Now, if you've watched our other interviews, you probably know who I'm talking about. I talked to the CEO just a little while ago. Their company is a smart collar. It does tracking, health, location, activity, and it ties to an application, which has the ability to integrate information from that along with numerous third parties. The big idea in their pitch? This is a platform play, not a product-oriented company. The pet wearable space is actually pretty crowded. There's a lot of companies making smart collars. What makes this company stand out is that they've built their platform to allow them to integrate with all kinds of different companies. So they can work with dog food companies or pet medicine companies or trainers or walkers or boarding or veterinarians. All kinds of different people can be integrated into this app, and the platform share data from the device, and this opens up huge numbers of different revenue streams. So that makes this much more powerful and more sticky than just another smart collar, which you could easily trade out at any time. Along with that, and sort of the adjunct idea, is that they have real traction with this platform concept. They already have major partners which have written large checks to help them do this integration work, and they're in serious negotiations with many more. So not only is this a powerful idea, it is working in practice, and that means a lot to an investor. Second company is one that was building an app for virtual communal sports watching. And the whole idea was, in college you'd hang out with all your friends and watch sports, but when you graduate and you go to the 4 Winds, you're no longer able to capture that experience of hanging out with your buds and trash talking and watching things in real time. So they created an application, an app on a smartphone mobile devices to allow you to recreate that, to watch in real time and communicate, put together kind of social circles. And the big idea with this app was virality. It had one of the strongest viral models that I've ever seen, because when you're watching sports with a group of friends, you have to have that whole group of friends all on the application at the same time. So you're going to be required to go and invite all of those people. Now, because we live in non-overlapping or not completely overlapping social circles, many of those people will probably have other groups of people they want to watch sports with, and they would then have to invite all of their friends. And so you get a rapidly expanding exponential growth just because of the nature of the kind of customer and experience that they're bringing. A nice bonus with this is this has strong defensible networked effects, which is if you grab the market and you have a large fraction of people using this tool to watch sports, their friends are all on it, it's actually very difficult to move to a new platform, because if just one of your friends doesn't bother to move to the new platform, then you're probably going to revert because you can get all your friends on the ones that you already invited them to. So rapid growth and an ability to exclude other players. That was the key to their pitch. The third company I want to talk about is a medical device company. And in fact, it's a number of medical device companies. I've seen numerous pitches from these kinds of companies that really all shared this same core strength. And that's fine. It's all right to have the same strength as another company. Don't try to be unique. Try to be authentic and clear about what your real strength is. And their strength was their team. All of these companies had great products, big markets, large potential, nice path to market. But what really set them apart was their amazing teams. These companies all shared the characteristic of having a set of founders who'd worked together before. This was not their first rodeo. They had built other medical device companies and been successful in exiting them. They know the industry, they know the opportunities and the pitfalls. They're already connected to their customers and their channel partners and the manufacturers. They have all the pieces in place. So this is an incredibly risk-reduced problem. Right? We know that they can execute this particular kind of business plan and this strategy. And so the plan is really solid. And when they speak about how they're going to bring this to market, they can speak with authority because they've done it before. The team is what really made these companies stand out. And they were smart enough to make sure they spent time talking about the team in their presentation. The fourth and final company I want to talk about is an innovative landscape watering company. So they've created a new kind of sprinkler head that allows you to irrigate lawns with much less water usage and with a lot fewer heads. So the installation labor required is much, much less. And their go-to-market strategy is to work with landscapers who will sell the product and the installation service to the end consumer. So it's a channel process. The big idea with this company was the amazing synergy and alignment of interests between all these parties. It was a classic win-win-win situation. So the installers love this. The landscapers can charge roughly the same amount for a system like this. The hardware costs are similar to a conventional sprinkler system, but they're using less than half the time to install it, which either means they're doubling their margins or they're getting to install twice as many systems. Either way, it adds a lot to their bottom line. So they're huge fans of this. And the end customers love it as well, because even though they're paying the same price for a sprinkler system, they're going to save a ton on their water bills. And so the system is going to pay for itself in just a few years, and they get to feel good about themselves because they're helping to save the planet. They're doing good while doing well. It's a wonderful thing. So the company is making this thing. The installers really want to sell it because it improves their bottom line. The customers really want to buy it because it makes them feel good and they save money. And so the whole sales process in the channel works really well. And I can see very clearly how they could roll this out and how you could easily scale it. And recruiting new landscapers is going to be easy because they all want to make more money. And each time one of them is recruited, they're bringing a whole new set of potential customers in. So rolling this out across the country is not going to be a terribly difficult thing. Each one of these landscapers could potentially be bringing thousands of customers. So it's a high leverage selling process. So while a lot of companies have somewhat murky go-to-market strategies, this one was crystal clear, and the company did a great job emphasizing this win-win-win in their pitch. Of course, there's a lot more good to be said about all of these companies, and all of these pitches hit all of the things that investors want to see. They ticked off all 9 of those boxes that angels want to see in a deck. But days later, really all I remembered about most of those 9 things was that, yeah, they'd checked off all the boxes. It was those key ideas that I remembered days later, along with that general feeling. And so making sure that the key idea you want me to remember is the one I do is the core job of the way you build your pitch deck. So if you can identify and emphasize the best aspects of your business, you'll actually have a big leg up against most of your competition. As an aside, the same process applies to marketing as well. You're not going to want to use the same concepts in a marketing pitch that you do to an investment pitch. But this idea of carefully selecting your key messaging points is exactly the same. So, for example, with the Smart Collar company, they're not going to talk to consumers about the platform play and how they're working with channel partners. Now, their message to the end user is all about the health and safety of their fur babies. And the medical device companies aren't going to talk about their team. They're going to talk about how this device helps save the doctor money or helps improve patient outcomes. And the water saving irrigation company, they're not going to talk about this synergistic relationship. They're going to talk to the landscapers about how much money they're going to make, and they're going to talk to the consumers about how much money they're going to save, along with saving the planet. Hopefully these examples have helped clarify the kinds of things you should highlight about your company when you're building your pitch. Now, unfortunately, many founders have a hard time identifying these things because you're too close to it. You know everything about your business. You know all the details, all the subtleties of your business plan, which are probably not the things you want to be emphasizing. And it can be hard to step back and realize those larger truths. And in fact, sometimes it feels like they're so obvious it's going to be insulting. And why would you tell someone something that's blatantly true and clearly evident? It is to you, it probably isn't to your audience. So if you can't quickly identify your strengths when you're looking at all of the things your company does and is, you might want to reach out, find an advisor, a mentor, a peer who can look at the various things that you think might be candidates for being your strengths that you want to emphasize and help you choose. That distance from your company may make it easier for them to identify your strengths than you can yourself. Let me know if these examples helped you identify your company's strengths, or whether I need to think about this some more and maybe make another video. If you did identify your strengths, I'd love to hear how you went about it and what those strengths are, either down in the comments or over in the Feel the Boot Founders Alliance on Facebook. Thanks for watching this episode of Feel the Boot. I hope you found it useful and interesting, and if so, please do the usual like, subscribe, ring the bell, and share this with other entrepreneurs. I'm trying to help as many founders as I possibly can. We're trying to build a community here, and speaking of community, I hope you will join us over at the Feel the Boot Founders Alliance on Facebook. Until next time, ciao.